Hey guys, right now we have an opportunity that I think is really cool. It's an opportunity to make a guaranteed 11.6% return in the form of income over the next 13 and a half months and from one of the best dividend growth stocks in history. The opportunity to make a guaranteed double-digit yield from a high-quality dividend growth stock is almost unheard of. And so obviously I jumped on the opportunity. I'll be sharing exactly what I did to make both guaranteed high income in the short term and also set me up for safe growing passive income over the long term. And more importantly for you, I'll be sharing exactly how you can take advantage of this income opportunity right now if you're interested and if you have at least $3,600 to invest. Even if you don't have $3,600, you can still take advantage of the strategy that I'll be sharing with you today. Before I get into all the details though, the stock that I am talking about is Leggett Platt, ticker symbol LEG. Leggett Platt is known as a dividend champion. If you're not familiar with what that is, a dividend champion is a stock that has grown its dividend, it's increased its payout every single year for at least the past 25 years. Because of their ability to pay increasing amounts of income to their shareholders year after year after year, like clockwork, and through any kind of economy, dividend champions are some of the best stocks that an income investor can own. With this in mind, I'm always looking for opportunities to invest in these kinds of stocks. And so when I read the latest issue of Brian Bollinger's Simply Safe Dividends and it featured Leggett Platt, I jumped on the opportunity and picked up some shares. On December 8th, I ended up investing over $23,000 into the stock, which sets me up for two things. One, guaranteed high income in the short term that works out to at least an 11.4% yield over the next 12 months, and two, safe, reliable, and growing passive income over the long term. Now, in today's video, I'm only going to be talking about the income opportunity that we have right now with Leggett Platt. I'm not going to get into any of the fundamental analysis at all. If you want to see what sold me on investing in the stock in the first place, then I will put a link in the description to Simply Safe Dividends, and you can sign, if you're not already a member, you can sign up for a free 14-day trial and you can check it out. In case you're wondering, I am not an affiliate of Simply Safe Dividends. I'm not getting paid for referring anybody to them. I am just a friend of Brian's and I'm a fan of Brian and his company, Simply Safe Dividends. And so with all of that out of the way, let's talk about the income opportunity we have with Leggett Platt right now, starting with my roughly $23,000 investment into the stock. On December 8th, I bought a total of 535 shares of Leggett Platt. I bought these shares in two different investment accounts using two different income strategies. In the first transaction, I bought 235 shares of Leg in my regular brokerage account, which is my buy and hold dividend growth portfolio. I don't plan on ever selling these shares. I simply plan to collect my dividend every 3 months for hopefully decades to come. I paid $43.58 per share for these 235 shares, which means I invested a total of $10,241 with this transaction. Since Leggett Platt currently pays a dividend of 40 cents per share per quarter, which works out to $1.60 per share per year, I locked in a 3.7% dividend yield. As a result, this stock purchase increases my passive income by at least $376 per year. If Leggett Platt keeps growing its dividend as it has for the past 48 years, the net number should only go up year after year. And that is completely passive income. And that's also passive income that looks safe. Consider this. Simply Safe Dividends rates a company's dividend safety by looking at its key financial metrics. It takes into account more than a dozen fundamental factors that influence a company's ability to continue paying dividends, such as earnings and free cash flow payout ratios, debt levels and coverage ratios, recession performance, dividend longevity, industry cyclicality, free cash flow generation, and return on invested capital. Dividend safety scores range from 0 to 100, and Leggett Platt's dividend safety score is 70. That indicates that the dividend is safe and a dividend cut is unlikely. This is a key reason why Leggett Platt is now a holding in my long-term buy and hold dividend growth portfolio. Like I said, I don't plan on ever selling these shares because they should pay me safe and growing passive income every single year no matter what's going on in the world, the economy, or even the stock's own share price. Now, I also bought shares of Leggett Platt in my 401k retirement account, and I generated guaranteed high income in the relatively short term by selling call options against those shares. In short, I bought 300 shares of Leg at $43.53 per share. At the same time I bought those shares, I sold to open 3 January 21, 2022 $45 call options for $5.58 per share. This move generated $1,674 in instant income, and that cash got deposited in my retirement account immediately. Considering the income I collected and the expiration date of the call options that I sold, I am getting at least an 11.4% yield in income from Leg in a 12-month period, which is just an absolutely mammoth yield from a Dividend Champion. And that's a guaranteed yield too, because it's option premium that I have already collected. Now, that's what I did on December 8th. Stock prices and option prices change all the time, but as I'm recording this video, our income opportunity looks even better today. If we want to make a similar high income play on Leggett Platt, here's what we could do right now. As I record this, Leg is selling for $40.29 per share, and the January 21st, 2022 $45 strike price call options are going for $4.68 per share. Our trade would involve buying 100 shares of Leg and simultaneously selling one of those call options. By selling a call option, we would be giving the buyer of the option the right, but not the obligation, to purchase our 100 shares of Leg at $45 per share anytime between now and the January 21st, 2022 expiration. In exchange for that opportunity, the buyer of the option would be paying us $4.68 per share. Because we'd collect the income immediately when the trade opens, we would be able to lower our cost basis from $40.29 per share to $35.61 per share. In other words, we would be owning the stock at a 12% discount to what it's selling for right now as I record. That's a nice margin of safety on an already reasonably priced Dividend Champion. The ability to immediately lower our cost basis in this manner is exactly what makes selling covered calls like this safer than simply buying shares of the underlying stock the traditional way. Yes, we are limiting our potential upside. If Leg shares climb to $50, for example, well, we'll still be forced to sell at just $45, but we'd still be selling shares for significantly more than what we bought them for, and we'd be generating high income in the process. So with this in mind, there are two likely ways this income trade would work out, and they both offer significantly higher income than what we'd collect if we relied on the stock's dividends alone. To be conservative, I'm not going to include any dividends in my calculations here for either of the following scenarios. The analyzed yields are generated from options premium and applicable capital gains alone, so any dividends collected are just bonus that will boost our overall annualized yields even further. Let's take a closer look at each scenario. Scenario 1. If Leg stays under $45 by January 21st, 2022, our option contract would expire and we would get to keep our 100 shares. In the process, we'd receive $468 in income. That income would be collected instantly when we open the trade. On a percentage basis, we would receive an 11.6% yield for selling the covered call in just under 13 and a half months. If you add in the dividends, that number could climb to a 15.5% total return. Scenario 2. If Leg climbs over $45 per share by January 21st, 2022, our 100 shares will get sold or called away at $45 per share. In this scenario, just like the first one, we would be collecting an instant $468 in income when the trade opens. We would also generate $471 in capital gains when the trade closes, because we'd be buying 100 shares at $40.29 per share, and we would be selling them at $45 per share. So in total, in this scenario, we would be looking at a $939 profit. From a percentage standpoint, this scenario would deliver an instant 11.6% yield in income in about 13 and a half months for selling the covered call, and it would also deliver an 11.7% return from capital gains. So at the end of the day, we would be looking at a 23.3% total return in about 13 and a half months. And that doesn't even count any dividends. Throw in another 3.9% from dividends, and the new total return we'd be looking at would be over 27%. So if either of these scenarios sounds good to you, then here is how we could make the trade. We would place a buy right options order with a net debit price of as close to $35.61 per share as we can get. The lower the better. Because options contracts work in 100 shared blocks, we would have to buy at least 100 shares of Leggett Platt for this trade. For every 100 shares we buy, we would sell to open one options contract using a limit order. Accounting for the $468 in option income we'd collect immediately, that would require a minimum investment of $3,561. Okay guys, that is it for today's video. Thank you for watching if you stuck around until the end. If you got any value out of this video, please give it a thumbs up. If you're not subscribed to the channel yet, please consider subscribing. If you want an alert the next time we post a video, please click or tap on the notification bell. I hope everybody is staying safe and healthy, and I will talk to you the next time.